Good afternoon, everyone. Thanks for joining us for our Fire Relief Fundraiser. We've got 7 great companies that are going to present today and also help out some of the communities that have been affected this summer by terrible wildfires. I'd like to introduce Jason Kosec, CEO of Integra Resources. The last time we had Jason on our webinar series, he was CEO of Millennial Precious Metals, but they completed a merger with Integra in May of this past year, and he's assumed the role of CEO of the combined entity. So it's been a while, Jay. Looking forward to hearing about how things are going since the integration, and interested to get an update.
Awesome. Well, thanks for having me on, Deb. Thanks for everyone for chiming in today on a Friday. And really thank you, Adelaide, for putting this on for such a good cause. For today, I'm just going to keep it very high level. If you want more background on the merger or any more detail on an asset level, please listen to our previous webinars or reach out to Josh and I directly, and we can definitely go into more granularity. Just a cautionary note, we will be making forward-looking statements today. Quickly, a snapshot of the company and where we sit right now. Okay, U.S. market cap $60 million, about $20 million U.S. in cash, 45% institutionally held from the longest, some of the biggest long-only gold funds in the space. Part of the financing that we did in conjunction with the merger, we brought in Wheaton Precious Metals for 9.9% of the company in exchange for a right of first refusal on future royalties and streams. We did not sell a royalty or a stream. They just have a ROFR on that. And then one of our bigger shareholders, BD Capital, who's a significant part of project financing in Canada. And not to note that management is just over 10%. Quickly, from a highlight on our projects, okay, today we will just be talking about our resource and development stage projects, DeLamar, Wildcat, and Mountain View, which combined have $624 million of U.S. NAV exposure, okay? That's on a PFS and an FS. We will bring you through on how we're going to add more value and really increase that number. And then really what you get in the bottom end in our exploration assets is really optionality and free carry that through our really systematic approach of exploration that we can make a major discovery at one of them. There's significant upside with the DeLamar non-oxide portion, especially with War Eagle and Black Sheep, some high-grade vein mineralization that is associated with the larger project. Projects like Grand Canyon that sit in the Wenban Formation, 35 kilometers south of the Cortez complex, that have some of the best drill holes drilled globally in 2021. All these assets are not baked into the evaluation, okay? So I think there's a lot of value to be abstracted from this portfolio. Our team, we're a very technical team, okay? And I think one of the biggest things that this industry mistakes is that as much as we're in the business of adding ounces in a systematic and scientific manner, we are also in the business of risk mitigation. And what that is de-risking level. So your metallurgical work, your geotechnical work, your resource conversion work, and developing those technical studies to remove what I like to call project killers. And all that work has been done, and we will continue to grow that work as we progress. From a permitting and baseline scenario, DeLamar has over 8 quarters of baseline work. In Nevada, we have 4. So we continue to progress it from a permitting perspective as we develop the technical work. The other thing is, how big can this thing get? And I think in Nevada, we understand the footprint and the controls of mineralization. We believe we can significantly grow the resource over the next couple of years because, as some people know, in the United States, you have 2 different types of exploration permits: as a notice and a plan of operation. So right now, Mountain View and Wildcat have only been drilled on a 5-acre permit. So it's only 5 acres of disturbance. Combined, those projects are 27,000 acres. By the second quarter of next year, first or second quarter of next year, we will grow that to over 800 acres. Right now on the 10 acres, there's 1.5 million ounces, 80% of which is indicated. So we believe we can significantly grow the resource base. North of the border in Idaho, DeLamar, we will be putting out an updated resource sometime by the end of September, which will include all the low-grade stockpiles that we'll discuss today. All in while, I think it's very important to work with our local communities and our local NGOs and work closely with the tribes to develop an agreement that can benefit all stakeholders. What I want everyone to understand here is the scarcity of these projects. So when you start looking at projects globally, looking at pre-production projects with a gold and silver resource estimate, there's over 2,800 projects, okay? Then when you start filtering them down, so projects not located outside North America, underground mining projects, projects without a valid economic study, projects that have greater than the 300 million of initial capital, and projects that have an annual production profile of less than 80,000 ounces, and projects that aren't by a producing company, you're left with 6 projects in North America. That's the scarcity factor that I think people do not understand in our space, frankly. And of the 6, Integra has 2 of them. Okay. Not only that, the recent acquisitions you've seen in the basin, the average acquisition cost for these projects is greater than $100 an ounce. We currently trade at $10 an ounce. The average acquisition cost on a PNAV consensus basis is around 0.89. We trade at 0.1. There's a lot of value to extract as we continue to grow and de-risk these projects. Some of the financial engine, so to speak, is our DeLamar project. This is the Heap Leach component of the PFS, okay? So right now we're sitting at 314 million of NAV, 33% IRR, okay? What the market doesn't fully bake into this right now is the low-grade stockpiles that we will be adding in our updated resource, hopefully by the end of September. So the number that is feeding this NPV is 81 million tons, okay? Right now, we believe the stockpiles will add anywhere between 40 to 60 million tons. That's significant value creation, okay, that we see over the coming weeks and over the coming years. That updated resource will be fed into a feasibility study by the end of 24. And what these stockpiles look like, the previous owner, Kinross, if it didn't meet their cutoff grade, which is about 0.85, it got stockpiled in these dumps. We went out and drilled pretty much all of the dumps, 80% of them, did some short-range variability at 30-meter spacing, some wider at 60 to see the conversion rate, and some significant intercepts, okay? 0.7 over 74 meters, 0.6 over 111, 50 meters of 0.6. If these were in situ results, it's a really amazing deposit, okay? So this hasn't been modeled into the PFS, but will be modeled into the feasibility next year and will be in the updated resource that will be coming out in the coming weeks. Now we move south of the border into Nevada. We just put out this PEA in June. Right now, we're sitting at $310 million of NAV, 37% IRR, and an initial capex of $115 million. Okay, as I mentioned, this is 1 million ounces payable. What we're modeling here is 1.5 million ounces. And remember, as I mentioned earlier in the presentation, is that we were able to do this on 10 acres of disturbance. Coming in Q1, that disturbance is going to go up to 800 acres, okay? And what we're trying to do is guide the market on how we're going to extract value. Now that a lot of the major showstoppers have been removed here, when we start stepping out, people can update their DCF and see how we're progressing. It's also important to remember in this PEA, 80% of the resource, is indicated. So most PEAs, 20% is indicated, So it's a very robust PEA. We strongly believe that through the exploration program next year and into 25, we can significantly grow the resource base to smooth out this production profile, Quickly, you just see here, this is the current pit. There's this green little circle. I colored it over in red. But there's a lot of targets that have not been drilled that sit outside the pit. This is a prime example here in hole 12, where we stepped 150 meters outside the pit. It was actually for a geotech hole and intersecting, 30 meters of 0.5, 55 meters of 0.4. That's something that doesn't sit inside of the resource right now, because for inferred, we need 100-meter spacing. And because we didn't have the disturbance, we couldn't put a hole in the middle. So there's significant resource growth at Wildcat. Not only at Wildcat, but at Mountain View. We were the first people to drill core holes here and understand the kinematic controls of mineralization, which is vital to the success of an exploration program. And what we noticed is that the main control of mineralization is this hydrothermal brecciation, which is coming up vertically and brecciating this flow-banded rhyolite, which no one recognized. We recognized this, and we were able to step out 100 meters outside the pit. Our second last hole, we drilled almost 40 meters of 4 grams, 100 meters outside the pit. Next hole, we stepped out another 250 meters. We got into the breccia and lost the hole. But now we understand, like I mentioned, the kinematic controls of mineralization. And this hydrothermal breccia is about 30 meters wide, running about 2 to 4 grams, plunges to the northwest along this frontal range fault, where we have significant showings and previous mine working. So the potential to grow not only at Wildcat, but at Mountain View in higher grade mineralization is highly probable. How do we stack up against our peer group? We, by doing this merger with Integra and Millennial, we became the largest gold and silver resource endowment in the Great Basin. As I mentioned, we'll be putting an updated resource out in the coming weeks, which will push us over the 7 million ounce threshold. I think it's important to note, especially in the commodity market where metal prices are quite cyclical. Everyone says grade is king, and frankly, mining is like any other business in the world, and it comes down to margin. And one of the biggest things that drive margin is the strip adjusted grade and your recovery. What's the strip adjusted grade? How much waste we have to remove to get to the ore. And when you do that, the Integra assets have some of the best strip adjusted grades and some of the best recoveries in the Great Basin. These are all producing assets. So you can see how we stack up. So there's not only are we the largest, but some of the best margins in the space. Where do we see this going in the future? We strongly believe that we can push this well over 200,000 ounces. What does that reflect in market cap appreciation? Projects like this that have significant margin and produce over 200,000 ounces are anywhere between 500 and over $1 billion of market capitalization. So there's significant growth that we can extract here. How are we going to extract that growth? Us as Integra, we believe in rapid project advancement and disciplined risk-taking to maximize shareholder value. And why we believe in rapid project advancement is because the biggest killer of junior companies is time. The time value of money is critical. And we understand that this business is a risky business, and that's why we have to be very disciplined and go above and beyond when we do our technical studies. So, this year we did a $35 million financing in conjunction with the merger. We released our PEA and updated resource. We will be releasing an updated resource at DeLamar. And following that, the mine plan of operations that kicks off the permitting process for the DeLamar project. In 2024, we will issue a feasibility study and start off the resource growth drill program in Nevada. 2025, we should have our draft EIS out, the Wildcat feasibility and submitting the mine plan while continuing to grow the resource at Mountain View. And in 2026, project financing for DeLamar and the finding of no significant impact, which is basically your record of decision in Nevada. And as we go along this value creation curve, okay, right now we trade at 0.1. Permitted ounces in the basin trade anywhere from 0.5 to 1 times on a PNAV consensus basis, okay? And as I mentioned, right now we sit at 624 million of combined US NAV, and we're a 75 million Canadian market cap company. So as I mentioned, it's not going to happen overnight. In this space, we need to be disciplined and understand that it takes time. But over the coming years, there's significant value to extract, especially at these levels. I think everyone knows the team. George was the CEO of Integra. He is now executive chairman. I went to president and CEO. Andre St. Germain is with us as our CFO, and Tim Arnold as COO. With that, I can open up the floor for questions.
Thanks for the update, Jason. Great progress. So a couple questions for you, and anyone in the audience, feel free to enter questions if you have any. So you now have 3 advanced projects that are going to require a fair bit of capital to get to a record of decision, which is essentially a green light to initiate mine development. How do you intend to finance that?
Deb, it really is market dependent, okay? But reality is it's going to be a combination of debt, equity, royalty, and possibly streamings. And how we go about that, and what the percentage is we're going to have to make that decision sometime in 2026. But what we've done, Deb, and it's very important, is bringing in partners early on, like BD and like Wheaton, that not only give us significant project validation, but it removes a lot of project financing risk, because those will be our partners for project financing. And they're already in the tent now. So how we do it, what the level of each is, we don't know yet. But the people that we will do it with are already inside the tent. And I think that's the most important thing.
Okay, and then an audience question, which is related. How do you plan to raise money in 2024?
Again, it's depending on what the equity market looks like, okay, I think is an important thing. We're very lucky that we have a very strong group of shareholders. Ideally, we don't raise equity at 0.1 on a PNAV basis. What we would do is we have a low royalty burden on all of our projects. Okay, so when we can get money from a royalty at 0.7 or 1 times NAV, it's much more accretive for us to do it that way than it is traditional equity. And how that changes over time, we'll have to see. But it's. Unfortunately, things are dilutive. It's just on an asset level or on an equity level. And we just got to be, look at our cost of capital. But if it was have to do it right now, it would be through a royalty.
Okay. And then post-merger, your G&A/burn rates likely increased. Do you have plans to mitigate this?
Yeah, one of the reasons we did this merger, okay, was to reduce our. Okay, well, it's about $2.5 million a year. We reduced the G&A. Okay, frankly, there's too many companies out there, and not enough management teams to do this, and not enough cash to go around for everyone. I think there are plans to reduce some of the G&A, but we've already done that significantly with this merger, as I mentioned.
Integra, between its land holdings in Idaho and Nevada, has a lot of greenfield opportunities. What are your plans for these exploration-wise? Or as one of the audience members is asking, do you have a plan to monetize non-core assets?
Yeah, it's a big can of worms, and I'll stay out of the weeds on that one. But, if those exploration assets were in the hands of another company, that's a company worth, $20 to $50 million. So there is a lot of value that can be extracted. To spin them out into a new company just creates a problem that we're trying to mitigate is that there's too many companies out there. So how we monetize that, we're looking at that right now because there's not enough cash to go around, especially in this market. But possibly JVing those projects out with a major company and structuring something that's we get a free carry to a PEA and then it's a 70-30 split and we take a 10% management fee. We are looking at creative ways to extract value out of those projects.
What's Integra's real edge vis-a-vis its competitors in the junior mining pre-development space?
Deb, I think one of the biggest things is between the combined company and the team. We're responsible for almost 70 million ounces of discoveries across 8 projects. 6 of them are in construction or production today. So this is not our first time doing this. Okay, not only that is we are the largest gold and silver resource endowment that's not owned by a major mining company in the basin, with some of the strongest margins. And lastly, and this goes into the M&A topic, we are the next permitted projects too. Okay. And really that submission of the mine plan of operations is a major catalyst. And that's what major companies want to see. Okay. They really want to see, that mine plan submitted to see what comes out of that. Not a lot of companies have the technical capacity or the financial capacity to bring them the whole way through the cycle.
Got it. One last question from me. And you were just talking about the mine plan submission. Can you just give us a full update on where you're at with permitting at DeLamar, next steps, and why you believe that Integra might have an easier route to permitting versus some of the other projects in the Western U.S.?
Yeah, so by the end of September, we'll finish all of our baseline studies. Okay, so you need 8 quarters of baseline work for your mine plan of operations, and what we've done is you can spread that through once you submit the mine plan of operations in Idaho. In Nevada, you have to front load your baseline work. So what we did is we went ahead and did the 8 quarters before we submit, so that there's no kind of red flags when we go into the actual DEIS phase. So when you submit the mine plan of operations, it's about a 2-year time frame to get your record of decision, and then depending on how much we push, it's probably another couple of months to get your notice to proceed. Okay, because there's a bunch of you can get your record of decision, but then you need your notice to proceed. And there's a few other permits you have to get along the way. But because we front loaded a lot of this and work closely with the BLM, and we believe that we're far ahead of our peer group.
Okay, great. That's perfect. That brings us almost exactly to the hour. Is there anything you wanted to talk about today that we didn't touch on?
No, I'd like to thank everyone for joining today. It's not an easy market out there for anyone, frankly. But we strongly believe that we will keep on delivering on what we say we're going to do on the path of getting, like I tell our team, is we're on the path of 0.1 to 1. So that's where we want to get to. And in production, you get valued with good projects at 1 times on a PNAV basis, and we trade at 0.1. So it's going to be an exciting few years to get to that level. So, yeah.
Awesome. Well, thanks for the update, Jason. Looking forward to some of the news flow this fall, and hopefully I'll see you next week.
Awesome. Well, thanks a lot, Deb, and thanks you everyone for joining.